Good morning, guys. Welcome to today's market snapshot session. My name is Samson Mzera, and I'll be taking you through what we've just had for the week and what to expect next week. So again, if you can, just a quick mic check. If you can hear me, just say hi on the chats. Also, please tell know we are following. Okay, so we're going to look at this is 5 charts, and it's the start of the year, so we've had quite a bit of news coming in from well over last week and this week, and most of it has not really moved the market as much, and it's understandable. We're in January, and we're going to cover that also. Also, we're going to talk about the expectations we had from last year. Seeing Malombe and Kemboi, hello. Yeah, I think that's good enough. I think my mic is clear. Okay, so yeah, so we're going to be discussing the expectations we carried over from last year and if there has been any changes from that. So on the 4-hour time frame, can see that price movement for this year is just these two sections over here. Yeah, basically this is from here. This was last year, so seemed to have had some sort of cooling off from that momentum we had from last year. Remember, last year we were really excited about the dollar easing, and that created some upwards momentum for euro, for pound. If you look at pound, also carrying over from last year, I use the H4 chart. Yeah. So these are the past 2 weeks. Again, I'm going to highlight it from the H4 chart. So this one and this one, like that. Yeah. So there's some sort of upwards movement, although not so clear on GU, but it's very clear also on Australian dollar. So what has changed from when we last discussed the possibility of the dollar being weaker this year? So that a lot of that market excitement has sort of reduced, and there's an article that is putting or highlighting why the expectation has reduced, or the excitement has reduced. So just going to go over, I think it's this one. Okay, so going to go through a few articles. So it's good to know what the market is expecting, and then how we are going to behave from that expectation in terms of aligning our bias and what should be the long-term trend in the market. Okay, so here it's saying the mood in the, let me just zoom this in. The mood in the FX market can be described best as mixed. Yeah, the dollar is recovering from some of its late losses as the scale of expected federal easing cycle is pared back. Yeah, so there was excitement that we'll start seeing things going back to normal and the dollar weakening, but it seems as though the market is in a consensus mood or opinion that we might still take some time before that happens. So the consensus view, however, remains that 2024 will be the year of a weaker dollar. So in like broadly speaking, for the year, we should expect the dollar to come down once they start cutting. But now the timing, the timing is very important. How soon should we start making that assumption and going short on the dollar is what is now proving to be tricky. So our preference is that next major leg of the dollar decline probably comes to the through late in the second quarter as the Fed launches its easing cycle. So I think we'll talk about this in a minute, but according to this article, they're saying probably in the second quarter of the year, late the second quarter of the year is when the easing cycle might begin. But if we have a look at the minutes, because we had FOMC minutes last week, just a quick glimpse from these headlines. Here is one example saying Fed officials in December saw rate cuts likely, but the path highly uncertain. Yeah, so it's proving to be that more so than ever, we'll still be looking at inflation and trying to see how that trend is going. Remember, it's the trend in inflation and not necessarily 1 point reading in inflation. Yeah, so it's looking very highly unlikely because it's not as straightforward. Remember the previous meeting before this, Powell was very adamant on saying we're easing, it's time to look ahead and things like that, and that made the dollar weak. But then the minutes are sort of saying something a bit different, although along the same lines. So it's looking very tricky, and that's understandable because if you look at the markets, for the better part of last week and this week, everything has been ranging. So if you look at Euro USD, if you look at GU, we've not seen such strong movements in the market per se. And that's because we're still trying to get a mood of, okay, what is the best direction to check the markets from here. So that's with the dollar. So let's talk about the readings we had on inflation. Now that we know still you're going to have data dependent readings on inflation and so forth. Yeah. Again, because of that mixed mood and because we are not really, we've not yet like decided, okay, this is going to happen, then even the NFP that came in last week was received with mixed reactions. The figures came in slightly higher than expected. We had improvement in hourly earnings and so on and so forth, but it didn't have that huge impact in the market because, again, at the moment you're focusing on inflation and not on, yes, you're focusing on the economy, but the key point is how soon is the Fed going to start cutting rates, and that's primarily on inflation. So if you look at the reaction we had for NFP last week, it was just a week. So let me just delete this. Just a minute. Put back the line. It's here. Yeah. So if you look at the impact of NFP from last week, it was a whipsaw because we are still focused on. So this was last week NFP. Yeah, Euro USD. GU. Let's zoom out a bit. So NFP was, let's see, it's around 4th. 4. Just a minute. Yeah, so it was this point over here. So again, we are trying to know what is the mood of the market because it's important to know the mood of the market before you start having a bias of you should be buying or you should be selling. So generally, you can see that this reaction over here, although we had a stronger reading, which ideally we expect that to create a stronger dollar, it goes against the belief that the dollar should be weakening this year. So that's why we had this mixed whipsaw here, because it's now we are receiving conflicting information with regards to what will be happening. So it's not very straightforward, and that might be very tricky when you're trying to trade. So that was last week's reaction, and then this week we also had inflation report, which is now more important, considering that's what traders are focused on. So I think it's this one. So where is it? I think you've already had a couple of readings coming out. Yeah, so we had inflation on Thursday, and again, it came out as 0.3. Now, this is the reason. There's a time when you are discussing analyzing news, and we said whenever you have an expectation being written here, then you have to cross-check it across different articles and across different sites. So, for example, that one, the expectation, some other outlets were still expecting 0.3% inflation. So here it's saying Thursday was a day that requires quite some unpacking. The CPI came in at 0.3. This was broadly expected. Yeah. So to some outlets and to some traders, this expectation here, where is it? Sorry, I got it wrong. Yeah. So to some traders, they're already expecting 0.3. So it didn't come in as a surprise of higher inflation. So it's always good to cross-check. Then going on, they're saying this is broadly expected. And then it leaves US CPI inflation running at 3.5 to 4% area. Yeah. But again, the Fed usually uses the PCE indicator instead, and it's running at 2.6. Yeah. So the picture that is coming out from all of this is the latter in particular is more palatable with Fed hike ambitions than consumer price inflation released on Thursday. But still, the consumer price inflation was not as good as it could have been. Yeah. So the fact that we are expecting a weaker dollar for the year and the fact that we are getting conflicting information means that, or explains why we are seeing that the market is kind of ranging instead of going with the general opinion. So let's look at Euro USD and GU for that. Yeah. So this is Euro USD. The bias should not be, we don't have any particular bias at the moment. And this is usually a very tough moment for traders, especially when you can't clearly say it's going to be an uptrend, it's going to be a downtrend. And that is explained by the fact that we are in a range. Why? Because you have that conflicting evidence of you expect the dollar to be strong, but then again, the news is coming against that. So you expect the dollar to be weak, the news is coming against that expectation. So we're going to rely purely on technicals as to how we play this one out. And that's why, for example, with Euro USD, we have an area there, we have a support there, and we have this area over here. Yeah. So for Euro USD, if at all we're supposed to have a bullish bias, then we have to clearly break out of this consolidation like that. So you have to clearly break out of this previous highs for us to know that, okay, we might be having a weekly uptrend, and that is confirmed by that change of character from us being in a downtrend to a sideways trend and now clearly on an uptrend. Yeah, but it's not a very strong, it's not going to be a very strong uptrend because there's conflicting evidence on how the market should go. Yeah. Same thing with the GBP USD. We have that cooling effect also. So we're going to start with H4. Let me just remove this and this over here. So we seem to have been at a key area, which is this zone over here. Yeah, we seem to be at a very significant support zone. And if at all you're going to assume it's going to continue being an uptrend, then we clearly need to see sustainable breaks above previous highs. So if you look at something like this, for example, if you clearly if you look at the 1 hour time frame, for example, yes, we're in an uptrend, but the uptrend is not, it's not very convincing at the moment. Yeah, so it's good to be careful. Usually when you're doing these market snapshots, most of the times we can clearly say the bias is up, we can clearly say the bias is down, but that's not the case at the moment. However, one thing is for sure, if we do receive any news in line with that's going to support a weaker dollar, then that might give some momentum to this trend, because we are still expecting the dollar to be weaker for the year. So any news that results to a weaker dollar, as said in the last market snapshot, that was the last one for 2023. Any news that comes in support of a weaker dollar from the calendar, then it's going to give some momentum. But the major news, of course, is on inflation, and we are 19 days away from the FOMC, which is also going, I think, to provide support for that trend upwards. Yeah, so long-term trend is still upwards, but we need to be very cautious, especially these first few weeks of the year, on how to approach trading, especially Euro USD. Next chart, this is GU, AUD, Australian dollar. This one is looking a bit more palatable, if I might say so, because remember, we're expecting commodity currencies this year to have a good run, and Australian dollar is one of those commodity currencies. So in the event we start seeing market structure to support an uptrend, then it becomes a bit more obvious that we should be looking for buys. Yeah. So commodity currencies will be on our radar, especially for long-term trends. And quite so, we've had the Australian dollar sort of cooling off. But if at the point where we find a healthy change of character and we start seeing signs of an uptrend. For example, if at these levels, just zoom in, this is the 4-hour chart. If at these levels we see that break from the previous zone, and then from there we can be looking for proper retests or retracements that can aid us in going higher. Mind you, it's not a very good, it's not very it's not going to be very straightforward, considering also Australian CPI didn't come in. Just a minute. Yeah, so the Australian CPI didn't come in as strong. So having a case to support there is also going to be a bit tricky, although it's still making a good long-term case. We said all the commodity currencies are Norwegian, is it Norwegian krona and Australian dollar? Those ones will be looking to see if we have that long-term trend upwards if the global economy recovers properly. That means if we start seeing demand in commodities. Okay, we have that. Today we have PPI readings. Usually PPI doesn't have that much of an impact on the markets, so we shouldn't expect a lot of movement unless the bias comes in favor of our long-term view. So that's how we're going to be approaching, especially these first few weeks, the trading. Yeah. So let's go back to let's go back to the charts, and just a minute before we go to the treasuries, the US index, US 500 index. Kindly share the link to the sites you are reading. Just go to so just go to think.ing.com, and then from there you can just find them. They're on the homepage, so you can go through the articles. But for these two articles, I don't know if I can share. Let me just, oh sorry, I have not shared that screen. Oh, I'm on that screen. Yeah. So for these two articles, let me just share the links down there so that you can have a look at them. So usually where we start with, again, is we are trying to establish a long-term view. Trading without a long-term view is like trying to navigate without a compass, because it's going to be very difficult to know what bias to fall back to in the event of a wrong or a trend that you're looking at. So that's why we're using fundamentals to sort of guide us on where we need to start from. Yeah. Okay. Other thing, expectations for rates. We're still expecting a big probability of a rate hike between May and June. That's when we have the highest probability of an ease. Sorry, a rate ease. That is the Fed cutting interest rates. So on 1st May, we have the probability at 98% of an ease, and on June, we have almost 100% probability of easing. Yeah. So these two, I fairly expect that's when we'll start seeing obviously a weak dollar, because once they start easing, then it's a continuous process. But till then, how the data comes in, especially inflation, not so much on employment, NFP, but especially on inflation, it's going to guide the opinions of the Fed. And according to this article over here, usually the Fed likes using the PCE instead of the PCE indicator instead of the CPI inflation indicator itself, because those are two different readings. So we'll be closely monitoring those to see how things unfold. Remember, if the inflation in the US continues to be persistent, then it might delay a rate hike. What is persistent inflation? When inflation is stubborn, for example, right now it's above 3%. If it maintains above 3%, 3-4%, and doesn't show signs of coming back down to 2% over the next few months, then it's going to delay that rate cut. You're used to saying rate hikes so much for the previous year. It's going to delay that rate cut that we are anticipating either in May or June. Remember, it's a rate cut that's going to start weakening the dollar. So if we see consistent, persistent inflation, a persistently high inflation, then it's going to delay. We might probably even start talking about July or September. So hopefully it doesn't get to that. And hopefully this trend in inflation starts to come down. So this is here. So this is PPI. Yeah, so this trend in inflation. So for example, month-in-month inflation, the moment it's 0. It's just been sitting at 0.3 when the previous reading and the current reading is still 0.3. Yeah, so we need to see signs of this yearly inflation coming back down to 2%. Yeah, it was just 3.1%, it went up. So it's looking like it's persistently here, but hopefully once it starts going below 2%, I mean 3%, then it's going to start making sense for looking for long-term shorts on the dollar. Okay. Another good indicator of the opinions of the market is this 10-year treasury for the US. And you can see for the past few days, it sort of went into a pullback. And that's why we've seen the dollar sort of strengthening a bit. Yeah. So this is a good indicator. For example, I can compare this with the dollar index. So let me just do that. DXY. No. Okay. Just a minute. Yeah, it's here. DXY. So you can see there's a relationship between the XY is the orange and the 10-year is the chart itself. Yeah. So there's a direct relationship between the US 10-year and the dollar index. Yeah. And you can easily explain the US 10-year as expectations on future interest rates. That's a very simple way to look at it. Yeah. And if we are seeing the US 10-year going back up, then investors are expecting higher yields. The dollar index is going to strengthen. Yeah, and that's why we've had this pullback upwards from the dollar index. And this is a comparison of DXY and the US Treasury chart. So you can see they sort of move the same on the charts. Yeah. Okay. So let's look at other charts. So I'm going to share my screen first on the charts. Yeah. Okay. So the other one is index US 500 or S&P 500. Now, again, it's important to explain why we were very excited last year. And the reason was we started having the expectation of cuts. Remember, cuts are good for stocks. And when there are cuts, companies usually have better valuations. And that's why we have that rally up. So you can see for the past week or so, we sort of had a pullback. And yeah, making a case for us going higher, we might need to see more evidence in terms of what the Fed is going to do before we obviously most of these indices usually just rally for the year. If you have long-term positions in these indices, most of the times they usually just end the year positive. So yes, the index is going to, there's a high likelihood it's going to end the year higher than where it started, but the timing is important. Yeah, so do we conclude that once it breaks this point, you continue buying, or we first wait for evidence? Usually there's a hard question to answer. So we're going to be monitoring this again for the coming market snapshots to see how that pans out. Same thing for gold. Yeah, we've had this slight weakness in gold, mainly due to the dollar recovering a bit. Yeah, but it's not going to be sustained, obviously. So we need to find areas that are going to notify us of a change on the trend. And that's when you're going to start saying, okay, it's time to be long. But so far, we need to, again, have more evidence that, okay, for the year, the dollar is going to weaken. That means gold is going to also be strong. But how do you time that in the market? So obviously, evidence of an uptrend, which is maybe a change of character or a change of the trend if you're using other techniques, but you need to see technical evidence of the market favoring that fast. Yeah, it's important to not be too early in the market when you're making these decisions. Okay. Any other charts we are looking at? GBP, JPY. We can open that chart. I think we're done with this. Okay. Just a minute. I think I'll need to look at USD JPY first. Yeah, so for USD JPY, we had a theory that we expect that long term, this is the year that the Japanese yen is going to start strengthening. Remember why the Japanese yen was weakening was because they were doing the opposite of what other central banks were doing. That's why we had it moving hand in hand with the shilling here. It went all the way till 150. And then here also, yeah. So towards the later part of the year, there were talks of they might start shifting the policy and start strengthening or shifting the whole yield curve control story. So that's what gave some strength to the Japanese yen. And if that's the case, if we continue along that lines, then we expect that the long-term trend for the Japanese yen, according to if they stick to their policy, if they start shifting the policy, then that should be this. They did have a meeting where they say they're still doing the YCC thing. That means a weaker Japanese yen, and that's why we had this extreme pushback. But I don't expect they're going to be holding on to that for any longer growth this year. So chances are the long-term view for Japanese yen is going to be downwards. So again, using your technicals, you need to know when the trend is changing. You just don't assume, okay, it's long term, it's a sell, then you start selling. No, you need to use your technicals to find the right entry point for this. So if we know Japanese yen, especially Japanese yen, is going to be strengthening for the year, then this explains the long-term outlook for GBP JPY. Yes, pound is also going to be strong, but that drastic move of the yen needs to be reversed. This entire move that we had last year needs to be reversed. That means I can, for example, if we have any news of the market coming in line of that opinion, that means if we have any news of, okay, they are about to start shifting that YCC policy and probably they start tightening, that means they start, because they've had negative interest rates for the longest. So if they start shifting that, then it's going to have a very huge impact on the long-term outlook of this chart. That means we might start seeing a change of behavior in this trend and eventually a downtrend. So today we're just looking at long-term opinions until we find solid evidence of a change in character and the news coming out. So weekly time frame, yeah. So we we're still making higher highs, but we failed to, we made a low. Oh, this is an equal low. So we have a series of equal lows here. This now becomes a fake breakout because we went and then came back into this range that appears to be forming over here. So in the short term, we'll be very careful. Should be very careful trying to take this higher. Should be very careful, especially with what the Bank of Japan, especially listening to what the Bank of Japan is saying. If indeed they're going to stick their guns and they're going to say we're sticking to what we've been doing, then yeah, in the long term we might start seeing a resumption of the trend. So it's very dependent on what they are going to be doing this year. And I think in the coming market snapshots, we'll have that long-term opinion on this. Remember, we need that long-term view so that now we can establish what the trend in the market should be. XAUUSD has been bearish. Yeah, so we've talked about that. We've had a look at the dollar index, and we've said the reason the dollar has been strengthening a bit is because that excitement we had in December is starting to come off a bit. Yeah, and that means we might not necessarily start seeing cuts very soon, and that's why we have sort of a weakening effect on the market opinion, and that's why the yields have sort of gone back up The dollar index, which is this orange one, has also gone back up. And that means things like gold have been a bit bearish. Yeah. Okay. Now, what to expect in the coming weeks? Today you have PPI. Again, PPI isn't quite a strong reading, but if it comes in favor of our weak dollar hypothesis, then it might provide a bit of momentum, but it shouldn't be a lot. Okay. So next week we have Canadian CPI coming out. This will be very important because you need to know, because China makes comprises of a lot of the global industrial manufacturing output. So it's good to know where the global economy is heading, and China is a good proxy for that. So if we start seeing signs of growth, that can have an impact on oil, and whether or not we will start seeing improvement in conditions, including strengthening of the Australian dollar and things like that. So you have CPI next week for UK. So I'm looking for something that we are going to use, PCE. Now this is more important. This is on 26th. This is probably going to be more important as the last reading for the month. That's going to guide us. And then the monetary statement is coming on 25th. Yeah, so just to summarize, we have nothing on, do you have anything on the BOJ? Flash services, yeah. Yes, for those who are looking to trade the Japanese yen, this is going to be a very important date. That's 23rd of January. If they're going to still say we are using YCC, then Japanese yen is going to continue with the current trend, which is weakening. That means GJ is going to have upwards momentum. But if we see signs that they're changing their policy, then that might be good, and that might create the trend for the entire year. Because for GJ, for Bank of Japan, once they decide to do something else, they stick to that for a very long time. And like places in the US where they have to say it's data dependent, you're going to wait for readings, things like that. So if they have a shift in policy, they usually stick to that for a long time. So that's going to provide a good long-term outlook for Japan, GBP JPY, especially GBP JPY and USD JPY. But of course, when these weeks come, we'll be discussing this properly. Okay. And then ECB, I remember the ECB and the BOE in the last meeting were very adamant on sticking to the possibility of either hikes or maintaining high interest rates. So that was what was providing that bullish pressure for euro and pound. So again, this is okay, but again, we need to know what the situation in the euro zone is going to be in terms of inflation, especially now that we have geopolitical tensions in the Red Sea and the Middle East. So we're going to try and see if it's going to affect, for example, oil prices. That means inflation might continue being high and things like that. So you need to be very careful going into these coming weeks with these headlines. Yeah. Having said that, thanks for attending the session. PPI is not going to have a very big impact. It usually doesn't have a very big impact. So if you're trading today, just continue with your technicals as normal. Usually guys I don't know why they overestimate what PPI can do. So just use your technicals as normal. During the news, of course, if you're just using technicals, you can halt a bit your trading. Then once that impact is over, and then you can just continue with your trading. The only time I'd expect PPI to have a very huge impact is if you have a very crazy reading over here. So if it's something like 0.6 or 0.7 or negative, then that's going to have an impact. But if it's just normal readings within expectation, 0.3 or 0.1 or 0, it's usually just okay. Okay. Enjoy the rest of your trading sessions. Remember, most of the markets are ranging sideways. Wait for key areas to break for you to conclude that momentum is going to be in either way. And by most of the markets, I mean Euro, USD, and sorry, euro, Japanese yen, and pound. I think I've cleared those charts, but yeah. Having said that, thanks for attending the session. See you in the next session, and hopefully we'll establish a stronger view of the markets. Last time we did the market snapshot, we were very confident with our uptrends, both in euro and GU, and indeed we had I think this push here. Yeah, the last market snapshot was on 18th, around 18th of December. Yeah, we had a very strong push upwards, and it was quite an interesting trading session. For those who are following the market snapshot, this was a very good point to like take advantage, this area over here. Yeah, same thing with the GU and legs. Okay, once we have the long-term view clearly, then that's when we get into the technicals to know what to do. But for the meantime, if you're trading sideways ranges, then this is a very good time for you to be trading ranging markets. Okay. See you all in the next session.